AMD, what did I do here today? Why did I do it? Why am I adding the stock so aggressively? Let me address that, okay? So AMD here today bought another 75 shares. Yep, another 75 shares. I cashed out 2 contracts, toll put options. Those ones have just been skyrocketing in value. Like, it's insane how fast those Toll Brother put options are going up, right? And so I'm kind of using those Toll Brother put options as like just kind of like an ATM machine for me right now, and just kind of cashing them out. I got more contracts to cash out. I might do that over the next few weeks. We'll see, especially if Toll stock keeps going down. I thought I would hold that into 2025, but the fact that this contracts are just skyrocketing. I mean, Toll Brothers stock is just getting wrecked right now. Like, I got to take advantage of some of that opportunity there, right? But AMD added another 75 shares. So now I'm up, I'm at 741 shares of AMD in the public account now at this point in time, right? And I'm trying to get to 1,000 AMD shares in the public account, hopefully by late January, early February. Once I get to 1,000 shares in the public account, I'm going to probably be good with buying more shares in the public account. That doesn't mean in other portfolios I might be willing to add some more AMD here and there after, I get to 1,000 in the public account. But for the public account specifically, that's a level of risk I'm looking to take on AMD, 1,000 shares. And the good news is I think I'm going to get there. And the reason being is I still have that ATM of Toll Brothers put options to continue to cash out here and put that money into AMD. And additionally, the stock's trading really cheap. And I mean, as long as the stock's under 150, I'm adding in more and more AMD. So the stock's so far from that, it's trading 119, 118 today, that it makes a lot of sense, right? Now, I'm also adding very aggressively right now. The reason being is AMD's earnings should likely come out end of January, beginning of February, right? I don't want to be in some sort of situation where people get really excited about AMD stock, it gets bid up. I'd rather get my position fully built out, at least in the public account, right, by the time earnings come out. That way, in case they bid it up after earnings and the stock pops 10, 15%, I already have my position built out at that time. If it goes down in earnings for whatever reason, I mean, I would probably even consider adding more shares of it, which, I'm not really planning on doing. My plan is to just get to 1,000 shares and hold in the public account, but we'll see. But that's why I'm adding so aggressively, because I've got to get the position fully built out before earnings come out there, right? And obviously we have tax loss harvesting going on right now. So in those sorts of time periods, I love to take advantage of this, right? My hope is we get more tax loss harvesting here into year end. And then my hope is Wall Street comes back, right, out of their vacation, their Christmas break vacation, right, New Year's vacation, and they put a bunch of selling pressure on the market for 2 weeks before earnings start dropping for all the different companies. And then, we could see AMD maybe $105, $115, something like that. So that would be my hope. I don't know if we'll get there, but let me answer this question. Could I see AMD stock go under $100 a share? My opinion is very unlikely. I would love to be wrong about that. I would love to give me AMD at $80 or $90. Are you freaking kidding me? Oh my gosh, give me every share in sight. I'll go way over 1,000 shares in the public account if that happens. But I think there's extremely low probability, and I mean extremely low probability, that AMD goes under 100. So, but I would welcome it, man. I would love that. Give me AMD at 85 bucks, 95 bucks. Oh my gosh. Come on. You guys know me. My long-term thought around AMD is that stock's going to be a $300 to $500 stock 3 years from now. So, if I can get shares at 80 bucks or 90 bucks, are you kidding me? The risk reward there is crazy. So I would gladly take that. Now, additionally here, you look at AMD, the stock's just inflected positive on a trailing 12 month when it comes to revenue. We've got several years of ramp on revenue coming for AMD. So, the fact that I understand a lot of these Wall Streeters might be in AMD at 200 bucks, 180 bucks, 170 bucks. So they're looking to tax loss harvest it here at year end. But I'm just it's wild to be selling this stock right now when we're just at the literally inning 1 of the inflection positive on trailing 12 month revenue. We've got several years of growth ahead for AMD. My opinion is minimum 3 to 5 years of major growth ahead for AMD when it comes to their revenues. 2030, what's going on with their revenue? I think that's a question mark, right? 2032, question mark. But for the next 3 years, I think it's pretty obvious to anybody that does some study on AMD that the company's revenues are going to skyrocket over this next few years, right? And then along with that, it's not just revenue is going to be skyrocketing, but you're going to see gross margins expand rapidly, net margins expand insane. Additionally, you're going to see the earnings per share and net income fly for this company. So, the cash flows are going to start pouring in. And then the question for AMD is, as those cash flows really start to build out, what do they do next? Do they try to acquire another company? Do they spend that money on share buybacks, dividends? Like, this is just, there's a whole world of opportunity for AMD. So they're just getting through a drama moment for them in the stock market. But man, there's a lot of upside ahead in AMD. So much upside ahead. So I love that one. Alrighty. And by the way, where's the stock trading at on a forward P basis now? A forward P basis 26. Are you kidding me? We're inning one of the next major growth cycle for AMD. So the fact that this is at a forward P of 26 when you're in the first inning of a new growth cycle for AMD, that's going to be a multi-year likely growth cycle. That's crazy. I don't know any way to put it, but somebody that's buying the stock, thank you. Thank you. Thank you. That's just a whole lot more profits in the future for me. Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. Now, I'll be buying any weakness we get over this next 48 hours. And but the other thing you got to remember with me, I buy every single week. So market goes down, I buy. Market goes up, I buy. Market's stagnant, I buy, right? I buy every single week. Now, there are certain time periods that I buy heavier. Let's say S&P 500 goes down 20% the next 2 months. You better get ready. I'm going to be releasing a lot of videos. I just spent $40,000 on this stock. I just spent $50,000 on this stock. I just spent $100,000 in this stock. Oh, man, it's going to be an onslaught, okay? If the market goes down significantly, if there's better and better deals in the market, I deploy money heavier. But with that being said, I buy every single week. So I don't take on that stress of trying to perfectly time the market and those sorts of things, because that's a fool's game. But I did buy 4 stocks here today. Let's speak about those 4 stocks. I bought AMD stock. And this should come as no surprise. Now, I knew I should have waited till buy like in the last minute or two of trading, because I knew that baby was going to keep going down. So I ended up buying about 30 minutes or so before the market closed. I got 123. I could have got it at 121 if I had waited till just before the market closed. But this is once again my thought process. I'm like, I think it's probably going to keep going down. It's probably going to be 121, or I thought 122, 121, end of trading day, right? I got to pay 123. But my thought process also, 123 is a steal deal. So do I want to get greedy and try to wait for the 121 and it doesn't happen, and then it goes to 125, and then I start thinking, well, maybe I'll buy it tomorrow. Like, at the end of the day, like, when I look back at AMD 2-3 years from now, I don't think it's going to even matter whether I bought it at 123 or 121 or 119 or 127. Like, it's all going to be irrelevant. Like, if AMD is going to where I think it's going over the next few years, which is $300 to $500 a share, we won't even remember. I won't even remember, like, oh, remember I got it at 121 versus 120. I won't even remember this. Are you freaking kidding me? No. All I remember is, I remember I bought a lot of shares at the end of 2024 going into 2025 for AMD stock at $100, and it's at a certain price, and I'm going to be likely a very happy camper. Or maybe I'm not. Maybe AMD just fails over the next many years and stock's $50, and I'm like, oh, dang, man, stupid. I don't know why I bought it. Like, I'll take that risk. Another stock I bought here today, Cheesecake Factory. Cake, paid $48.26 for those shares, bought another 50 shares of Cheesecake Factory. I'll gladly buy as many shares as I can of Cake. Another stock I'm buying as many shares as I can here, Nike. Bought more Nike shares here, $77. I'll probably be buying more Nike shares on Friday. Probably be buying more Nike shares a week after. Probably be buying more Nike shares a week after. Like, give me more and more Nike. It's never enough. Celsius, I bought another 30 shares here, $26.62. I'm likely almost done buying Celsius. I might buy some more shares in January of Celsius and maybe a little bit more at the end of this month. But my position's getting close to a point in time with Celsius and Monster where I'm happy with where I'm at in the public account. So, those ones are probably almost done in terms of me buying more shares, right? Now, if you want more thoughts about AMD, I don't know if you guys got the chance to see this one, buy AMD stock and don't stop buying. I did that video 8 days ago, and I talk about how like the next several months in AMD, buy every share you can. I think it's an incredible risk reward opportunity here over this next, I would say 1 to 3 months. And so, yeah, if you want to check out my more in-depth thoughts about AMD, check that video out. That's kind of a 32-minute beast there. And then if you want to hear me talk more about Nike, Celsius, Cheesecake, a lot of those sorts of stocks, I believe I featured all those stocks on this video here, 5 stocks I'm buying now, December 2024 edition. So you can definitely check out that and see some more thoughts there. Now, I love to show this graphic when the market gets a little more shaky, right? Because it kind of just brings people back to reality, I think, a little bit, right? And specifically points 1 through 3 here in these last two. Build a portfolio to be proud of years from now. So when you're buying out there over this next several weeks and next several months, think about it in terms of am I going to be proud of the stock I bought 3 years from now or not, right? Are they still going to be around? It's a high probability. Where's our revenues, net income is going to be at, right? Am I going to be proud of the business model they have there? 2, stay diversified as your alpha long term. Make sure you stay diversified. You always see me buying a whole host of stocks. I'll own 20, 25 stocks at a given time, right? I don't ever put all my eggs in one basket and hope it works out. That's not how you play this game on a high level. Third thing is growth, value, dividends, hedge, cash. All those are important, right? All those are important. You got to keep cash levels around. And when the market's going more and more risk on, you go more and more cash, right? When the market's going more and more risk on, you got to put on some hedges, especially toward the end of a year, right? And then you got to always be buying growth, value, and dividend stocks. They all represent phenomenal opportunities. Growth stocks, especially when the market gets tough, because people flood out of growth stocks, as you saw here today. 8% down for Tesla, right? No one wants a growth stock when the market's tanking. That's just the bottom line with that. Value and dividend stocks come in clutch when the market's tanking, because those ones usually don't go down very much. They actually preserve your capital usually very well, especially if they're great companies. Additionally, they pay you off dividends that then you can reinvest into the market and buy probably great growth stocks that are tanking at that particular time, right? So I'm telling you, those value and divs come in clutch, very, very clutch. Buy the dip, never trip. Always take advantage of these opportunities. I know whenever you get the market to go down, let's say the market goes down 20%, S&P 500 goes down 20% in the next 3 months. It's going to be the end of the world. Everybody's going to be talking about it's the end. The market's never coming back. Everybody's going to be, S&P 500 is going to go down another 50%, blah, blah, blah. Okay, percent down another 50%. I don't care. Give me, always remember, this is always one big game of they're trying to get your damn shares. Always remember that. They're trying to get your shares. Okay? And there's 2 ways you can play this game. You're either going to let them get your shares during a crash for cheap prices, or you're going to be the one that's acquiring the shares during a crash for cheap prices. It's one of the 2. So I'll let them have my shares. I let them have my shares when the market's skyrocketing, when my stocks are getting to, pretty outlandish valuations. In those time periods, they can have my shares. There you go. I'll let you have them. But when we're going through drama, when we're going through a major correction, the market crashes, anything like that, you better believe you're not touching my shares, but I'm going to be buying up all the ones that are selling during that particular time. And that's the big name of the game. And always remember, the most money is made during correction crash periods. How's it made? One is, if you have hedges on the market, they appreciate so rapidly. Look at the Toll Brothers, for instance. All of a sudden, that's a fairly new put position, up 71%. In snap of fingers, are you kidding me? There's a lot of money to be made from the downside if you have hedges on during a crashing market. And additionally, the most money is made from the long side during a crash. You know why? Because you're buying shares at probably stupid prices, right? That then a few years from now are going to appreciate so rapidly that you're going to make 4x, 5x, 10x times your money. That you're geez, that was easy. And it doesn't always have to be in crazy stocks. Look at Meta. Meta's a stock I was buying in late 2022. I have shares I bought in the public account at $88.94. $88.94. Somebody sold me shares. That's where the most money's made, right? Look at Tesla. During the crash of 2022, at the beginning of 2023, the stock was $101. I bought shares of Tesla at $103 at the beginning of 2023. Are you kidding me? Okay. You want to sell me Tesla at 100? I'll take that Tesla at 100, right? And now people are trampling over themselves to buy Tesla at 400 plus. It's just fascinating. But that's the name of the market game, right? When the market's going down, buy every share in sight. Add as much ownership as possible. When the market's getting to silly valuations, let them have your shares. They can have a portion of them. Don't give them all. Never give them away at all. If you own great companies, never give away all your shares. That's what you see me with Tesla. I've made so much profit on Tesla. At this point, I don't even know how much. It's so much, right? And I sold off the far majority of my Tesla shares because it's gotten a pretty crazy valuation. But you notice I never sell everything. I'll always keep a good amount around. I got 1,000 shares in the public account. I got other shares in other portfolios as well, right? I never sell it all. Because I'm like, what if Tesla is a $10 trillion company someday, right? I'm going to hold through that. Elon Musk is very special. Like maybe he could be the first to have a $10 trillion company, right? So I never let him have everything. But, if you want to give me crazy pricing on some of my stocks, go ahead. You can have them. Have fun. Best of luck, right? Everybody wins. So that's the name of the game, guys. Buy the dip, never trip, okay? Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings, all that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. All right, risk reward looks tough in 2025.
A bit of a positioning destruction last week, which probably helped kind of rebase things a bit. I think if you take the Fed at face value, which is kind of a flattening out unemployment rate, inflation still on a downtrend, getting a couple insurance cuts in there, that's all kind of net positive for equity. So I think your path of least resistance is to the upside.
It still is. Like, we're not upset too much by what Powell said last week, or the fact that we did have a hawkish cut and felt like decidedly so.
Yeah, not too upset. I think really what happened there is the Fed kind of confirmed what was a bullish growth outlook. They sprinkled in a little additional inflation risk. And I think that additional inflation risk is what you traded last week. That kind of worked against what was very long positioning. We think that positioning dynamic has kind of worked itself out. So now we're back to the situation where if we get a nice payrolls report to start next year, I think equities will respond really well.
Okay, so then if we do have some kind of upset, let's just say between now and the end of the year and then into the early part of 25, you'd be a buyer. That's what this sounds like.
Yeah, we're a buyer with the one contingency that employment report on the 10th of January is an extremely important event. But yeah, I think if you got a couple percent pullback here, I think you are a buyer of that dip. And then you're kind of read and react to the data as it comes in.
When you say, that data point is critical, I mean, how are you gaming that out? What makes it so critically important?
I think what makes it important is the Fed is telling you we think the unemployment rate is going to stabilize around these levels, and that's why we're able to kind of reduce the number of cuts we're going to do, next year. If you get an upside surprise in that employment data, that's equity negative, full stop, because your growth data is weakening, but that probably then puts the Fed in play to do more cuts later in the year. So we do think it kind of plays into a key part of their economic projection.
I mean, that would introduce just more risk of being forced to do more cuts, potentially at a time where we're thinking we may get reinflation from some of the policies in D.C. and the new administration.
No, I agree with you. I think there's a case to be made that in the first half of next year, the Fed could be in a really uncomfortable spot, right? Where you have unemployment rate rising, the government efficiency kind of trying to stop federal hiring, which has been a big part of the jobs growth. And then you get tariffs, which kind of push inflation a little bit higher. So there is a scenario there where the Fed kind of gets caught between a rock and a hard place, without a doubt.
What does the market look like, do you think, next year? We're ending in a place that's made people a little bit uncomfortable, right? We're back top heavy. How does next year look?
Look, I think risk reward is tough going into next year in the sense you have a very high EPS growth forecast. You have very extended valuation. So to your point, any bad news is going to kind of not be welcomed and actually punished pretty severely. That said, if the unemployment rate flattens out and you generate that earnings growth, then equity should kind of be up, a modest number. You wouldn't expect it to be 20% plus. I think, let's call it earnings growth as mid-teens. So you're probably playing for something in the 10 to 15% range. Best case. Worst case, you have something that looks like 2018, let's say, where you kind of had underlying decent data, but you had a couple really big pullbacks because of the risk environment you were living in.
But what does the make?
So the important thing to understand about Trump tariffs and any moves he makes, in 2025, a couple things. One is likely the tariffs are only going to affect certain categories and certain items. So it's not like it's necessarily broad inflation across everything, right? It might be certain space that maybe on things that he didn't do tariffs on the first go around, right? And so it could actually be a very small subsegment of, what could potentially be, in the inflation numbers. Second thing to remember there is there's lags, right? So Trump policy related changes, right? It will have an effect, but you could be pushing out to 26 or even 27 for you to actually feel it, actually see it in the numbers and things like that. It's not like somebody becomes a president and then just overnight everything changes. It's like a gradual change there. And so some of his policies could end up being inflationary, but they might not be felt for a year, 2 years from now, right? So everybody that thinks it's just going to be overnight, it's not really how it works. There's a big lag there, no different than the Federal Reserve when they raise or lower interest rates. There's usually a big lag there between it actually hitting the economy positively or negatively, right?
Of that look.
I mean, heck, look at the Fed. They've lowered rates several times now, and mortgage rates are basically the same as they were, this time last year, even though they've lowered rates several times now at this point in time, right? There's lags there. It's usually 1 to 3 year lags. And so don't be surprised if you see mortgage rates going down in 25 and then down in 26 again, right? But you haven't seen it this year in 2024. A lot of people thought the Fed's going to lower and right away mortgage rates are going to go lower. Not the way it works. There's lags here, right? 25, at this time next year, don't be surprised at all if mortgage rates are quite a bit lower. And same thing in 2026.
If rates, let's say, remain elevated, you get fewer cuts, and maybe it's partly on the jobs report. The broadening story is built on strong economy and rates coming down. Mm-hmm. Anything that upsets that throws all that out of whack.
Fair.
Yeah, no, I agree with you 100%. I mean, if you believe we're going back to the higher for longer narrative, that was the first half of 2024, right? And what did well then? Your large cap, your growth, your kind of safer stocks, right? What started to cause the rotation? To your point, during the summer, we actually got a broadening out of EPS growth. The 493 actually generated positive EPS, and we got a nice rally and broadening out. So next year, the earnings are set up for broadening. The question is, do we realize that? So that's going to be the ultimate test, I think, for next year is, do we get the broadening out in EPS that we started in 3Q? Does that follow through into 2025?
Would that be the way that you would invest in the market? You would, maybe take a little bit off of the idea that mega caps are going to have this outperformance yet again, and then play for the broadening that we're debating here?
Yeah, to me, your core position right now should still be in that higher for longer sort of situation, because that's what the Fed is telling you is going to happen. And I think that needs to be your base case. So I still think you have some discretionary telecom services and tech as a core position. And then, do you want to sprinkle around some broadening? Yes. The trouble with that broadening trade, I think you alluded to it, is if you get weak economic data, that broadening trade just falls apart immediately. So you need to be kind of very careful about how you broaden out. Otherwise, you kind of, open yourselves up to a big risk. So I think your core position is, call it large cap growth as a core position, and then you're kind of sprinkling on some risk, some risk in that broadening story. But I think you need to be very careful with that risk, right, in my opinion. Yeah.
Okay, we'll leave it there. Stuart, thank you.
Yeah, I mean, if you look how I'm positioned in the market, what do you notice? Let's say you look at the public count, $3 million plus portfolio. What do you notice? Well, look where my biggest positions are, right? Meta is the biggest big dog, right? They've proven they can get through whatever's thrown at them, and obviously trades at a very attractive valuation, so it's hard to get that stock down in any meaningful way. Additionally, you can make an argument that you can see significant upside in any sort of upside market, right? Additionally, they have the massive cash balance on the company that continues to build because they just throw off so much money. Additionally, if they ever want to cut CapEx because, let's say, business is in a little bit of a challenging space, they can easily do that. And what are you also going to see? Free cash flow skyrocket in that sort of scenario, which allows them then to do massive share buybacks to support the stock if they want, or dividends. There's so much there. You also notice I'm positioned in Tesla, right? Major position for me, which obviously benefits from so many different areas. You see Palantir is a big position for me. You see Elf's a company that gets through whatever, right? Major position for me. Amazon's major position for me. Amazon continues to kind of eat the world, and at least in my personal opinion, right? People continue to order more and more stuff on Amazon year after year after year and get more used to just ordering something and coming to their house versus going to physical stores. And AWS continues to grow and become more of a giant. The advertising business, which is straight profit, continues to grow bigger and bigger. And so Amazon just continues to be a company that's positioning to become a $10 trillion company long term. I've started an AMD position here recently and building that out rapidly, right? AMD is a company that, at the end of the day, if we're going to have any growth in this world, it comes back down to NVIDIA chips, AMD chips, companies like that, right? And then you see me building out big positions in stocks like Nike, companies that have been proven decade after decade after decade to get through anything. So Cheesecake, which has phenomenal growth. You got to be in very special companies that have proven they can get through storm after storm after storm, decade after decade after decade, right? Because we don't know what to expect over the next 4 years. Maybe we're going to have great growth and the economy is going to be booming, phenomenal. Maybe it's going to be, some years are going to be really good, some years are going to be really bad. Maybe we have a crash at some point in time and a major recession. We'll see. There's a lot of different scenarios, but you got to be positioned to weather any storm you're put in, right?